All right, good morning, good morning, good morning. Let's see how type of price action we get this morning. Give me 1 second. Fix this light. Okay, so we are making all-time highs right now. Price is bullish. So this is what I have for right now when it comes to me looking at it on the 4-hour perspective. Is we had this consolidation, we went above it, below it, back above it, we bounced off of it, and then we're pushing to the upside. So as price fills in this gap, just trying to see what price wants to do. So just letting price settle out, and then once it fills this gap and then kind of settles out from here, then see where it's gonna go from there. And just taking it step by step. So all this. So let's go here. So 4-hour. So from this consolidation, we had this consolidation right here. So you can look at this consolidation here. And I want to give the market time to settle. I'm not trying to rush anything, because like I said, today's Monday. If you're feeling the urge to take something just because, then you already going about it all wrong. So this is a consolidation I'm looking at today that we can come back to. And then from there, see what price it gives us. And while that's doing that, let that play out. And I'll be right back while that's playing out. All right, we are back. Let's go ahead and see what has transpired so far. So, just to clarify again, what are we looking for? Well, we're making all-time highs right now. So, for you to look for selling opportunities, could they be there? Yeah, but we're bullish overall. You just want to follow the trend. So, if you see bullish opportunities, you could participate. If you see selling opportunities, then are those opportunities you want to take? It's based on what you're looking at in the market. So, for me, I can do both. Um, because some days you want to go with the trend. Some days I'm feeling like I can catch when the trend is turning around. And sometimes you want to be with the trend, it's already turning around, and you're just trying to follow along. So you got to come into the market with a narrative, and then you build off of that. So in this case, prices making all-time highs. The only thing we have to reference as back data when it comes to where we're at right now is whatever's printing. So all we have is this right here. And this gap and these two up close candles on the 4-hour. Like I said, today is Monday, and you guys know on Monday there's no reason to push. You got the whole week. If a clean opportunity presents itself, you take it. If one is not there, you wait. Simple as that. So we had that 4-hour consolidation here, 4-hour consolidation here. This 4-hour consolidation is after the break. So price is in the midst of filling this gap here. So this whole gap right here. So from here to here, it's pretty much open, close to open. So just be this whole general area that it wants to feel. Let me see. Yeah, and let's see. Let me look at 15-minute. Because I already know where I'm at when it comes to determining where you're at with the buy is. So we can even say, put an alert here at 23, 411.25. So we'll put it at 0.50. And then we'll just say right here, at 4-hour. At 4-hour consolidation. Boom. So now I guess what I can do, take that off my screen. Because I don't want to interfere with what I'm seeing already. Set your alarms. Like I told you guys, if I'm not on the stream and I'm just trading, and I'm not trying to walk down price action, then I will set my alarm. I will be gone until it gets to my price. And then once it gets to my price or a certain area that I like, then I look for opportunities. Don't look for opportunities everywhere. Only look for the right opportunities in the right areas. That's probably a lot of times why you get caught up, is because you're trying to find a potential trade anywhere. You don't want to find it anywhere. You want to have higher time frame bias, something telling you that you should be looking for opportunity here because of this. So right now with this gap, is this telling me that I can look for opportunity? Well, price may want to come down and completely fill this gap. So based on where we're at right now, you can go to a lower time frame and just kind of monitor this, but you also want to get caught up in this either. So you have to pick and choose. For me, I want to get caught up in this. I don't feel the need to participate in this. Could I? Yeah, but do I feel the need to? No. And then that's what you want to get to, because your goal is not to take trades every day. And I don't want you guys to lose that thought, because that could be something that you could feel now, like, okay, I don't want to take trades every day. Then what happens when you get in a good market where the market is running? So just like this, when I have a couple good days, that doesn't tell me push harder. I might have to slow down, because you want to remain neutral. If you get too up, then them lows will bring you all the way down. If you get too low, that's as low as you can go. So either you're going to stay there or you're going to start to rise back up. And that comes from confidence. That comes from you seeing the chart, getting the right trades, and taking the right opportunities. So just like how I did here, like we have this 4 hour that we're looking at right here, this consolidation here, right? So I have this. I see this is all transpiring, but we also see that this is bullish. So after this push up and we have this gap right here that price wants to fill, if price wants to continue up, that's what price wants to do because we are in a bullish market. But if you're participating in areas in which there's nothing to use or grasp onto, and then you're just trying to find an opportunity, that's how you get smoked because you're trying to take anything. Like if you come into Monday with a mindset like I got to get something automatically right away, that's how you get messed up because you're not patient. And the patience is gonna get you farther than you will ever know. That's how I always say it. People say it all the time, but patience is not coming from you waiting for the right trade. Patience comes from you having a winning streak, a losing streak. You not changing your strategy, what you seeing, keeping it simple. All that stuff comes from patience and discipline, but that all comes from something that's not on the chart. It's out of the chart. So definitely keep that in mind all the time, man. So let's go and look back at what's going on. So let's turn that off. And let's look at current price action. So looking at current price action, if I looked at it from a market structure standpoint, and I was telling you guys how whenever I see imbalance, and I look at that imbalance, I look at liquidity inside of that imbalance. So just referring to what I was talking about last week, you see how we have this high right here. So, see, like I told you guys, whenever I do something, I keep index cards on me all the time. Like these are good. I'm telling you guys, get these because it's gonna take you a long, long ways. Like even this one right here. This one right here. My first question for myself is, where is the draw on liquidity? That's where market wants to go all the time. Do you feel in sync? What phase of the market are you in? Do you have a dealing range? And all those things is you asking yourself, do you have it? Are you seeing it? And if you're not, then you can't do anything until you feel like you're in sync or you're one with the market. Let's see. Let's see. Let's see here. So liquidity. So when you're seeing price trend down, right? And I'm looking for liquidity, most people just look at the highs and look at the lows. Well, whenever you see imbalance, you're looking at imbalance like this, like, oh, here's a ceiling or a SIBI, and then this is regular imbalance, and then the price bounces off of it. But this is not how I'm looking at it. This is not how I want you guys to look at it. This is more of an advanced way of looking at it, and if you use it the wrong way, it can throw you off. So you want to keep it as simple as possible. And what I mean by that is whenever a price is pushing down, we make a nice imbalance, and I feel that price is trending that way. I'm looking at the flow of liquidity, which means that this high right here, this is a SIBI, this is going down, so I would use the third candle's low. I'm sorry, third candle's high, and then I would take that liquidity and drag it all the way across. Now, what this shows me is once this low is made here, and then price pushes up and breaks this and makes a swing high here, then my dealing range will be from here to here. So now what does that show me? That shows me that price was inside of this range, and when we went down, went to a discount, and then we pushed up, targeting that high, then we'll target the low. So all this was playing out already. But if you would have looked at it from, oh, well, price is pushing down, the high would have been all the way up here somewhere. Now look how much you have to wait for price to get back up there. So this is more of a right now scenario when you're looking for liquidity, because you're looking at, or you're trying to find, where are you at in the market right now. But you can't just copy and paste that and it's going to work. because you have to know what imbalances are you looking for. If you look at every imbalance as it should do that, create a range and break out high or low, that's not how it works. You have to have the right imbalance, because most times the imbalance that I'm looking for is going to be inside of a discount, or a discount inside of a premium. So from there, then I look for that liquidity, but I have to be getting in sync with the market. I'm not looking for opportunity. All I'm trying to do is get in sync to see what dealing range are we in. And then from there, I'll drop down to a lower time frame. So like in this case, let's say we'd have had this and this, right? You still have to anticipate that price wants to go up. And why would you say that? Well, price took out the high and then we came back down to a discount. Or you could have seen that it probably could have took out the low. So in this case, you're trying to go against the market, unless you're seeing that price wants to go down to this low. So from there, that's when you go 3 minute and see how you can see this price action inside of here. And then you can go 1 minute. And then you can find the model inside of here looking to go up, if you were looking to go up. But this is also a bullish market. So this will be opportunity you were looking for if you were looking to be bullish, based off the range that you're in. Because my whole thing was finding the range. That's the most important part. So in this case, your model would have been this small right here, that, and then that. So that would have been confirmation. This would have been inversion. And then initial stop loss would have been here. So that was giving you a to the high. Here. That's there. So 1 and 3 is here. And then a 1 and 2 is here. Remember, 1 and 2 and 1 and 3, that's based off your risk. If you feel more comfortable with more of a cushion, you want a 1 or 2. If you're okay with the trade based off the risk and it's giving you a nice 1 to 3, okay, cool. Because there's a video I did. I had to redo it because of the audio. I did it this weekend. I had it in my notes, but this video pertains to risk management and how to look at the 1 to 3 or 1 to 2 or even 1 to 1, and changing your perspective or your mindset on the risk, and not letting the risk be the main factor on why you're not taking the trades or why you're getting stopped out or what are you seeing. Because some trades may look like a 1 to 3 and are giving you a clean 1 or 2. Like, look at this, you're risking 8 points. So are you going to be greedy and say, well, I want to risk only 5 points to make 16 points? It's 5 points. You're in NASDAQ, NQ, which moves 5 points like it's nothing, moves 25 points like it's nothing. So you want to be in a market where you're risking that low, where it takes all it takes is 1 wick to stop you out, when you can do a 1 to 2, and now a 1 to 2 push you below the low. So if it sweeps that, like, okay, well, it's up the low, that's where I wanted to go. But it's giving you more opportunity to stay in this trade. Because guess what? Once the trade starts to take off, let's say you deal with this drawdown, it's the only drawdown you dealt with, then that will be 5 points. So that's a 1 to 3, but you say your stop loss to a 1 to 2. So the most you were in drawdown was 5 points, and then it pushed up. From there, that whole risk factor changes as price pushes back up, and we're going to go over that in the video. I don't want to spend too much time on it because it'll take away from live price action. So, but yeah, definitely want to help you guys with that when it comes to just the mindset on it, and have a separate thing where we just talk about that. Okay. So even in this scenario right here, right, what I was talking about this, well, price is still pushing down. So in this case, I'm looking for liquidity. I'm not using the up close candles or looking for price pushing up and then that liquidity. As it's pushing down, my focus will be here, because to me that's a liquidity sweep. So here, and from here, once this candle is done, it creates the next candle. If this is going to be a swing high, then that range would be from here to wherever this stops at, or whatever this swing point is. And if price wants to be bullish, wait for it to come back down to a discount and continue back up if it wants to. But you have to let that candle finish. So whenever I'm looking at price action or focus on price action, I'm asking myself, is the 15-minute ready for what I'm looking for? Or is price trying to do something else? Well, we're already going for this high right here. So we're already going for this high right here. And then if price doesn't take it out and then price comes to the downside, okay, cool. Now we have something that we can target because it got close to it. And we already swept the low. But if price goes and takes out this high and then we push up and then we still create that range, then if it comes back down to a discount, I have to ask myself, is it trying to buy or is it trying to sell? And I have to be prepared for both. But that's the thing about what you guys have, the model. Realizing that the model gives you both scenarios. Once you have a dealing range, you can look for a sell or a buy based off where the model is, off what you're looking for. If you're looking for a sell, your opportunity is going to be in the premium. If you're looking for a discount, your opportunity is going to be inside of a discount. From a buy, it's going to be inside of a discount. Okay, 1 second, guys. All right, what action do we go? Okay, so you see that high was taken out, it was swept. So that's showing that price may potentially want to go to the downside because we swept the high and we come down and sweep a low, but we have these lows inside of here. But that's that high on the 15-minute. Let's see. Yeah. Look at the hour. See that long wick there? So that can be that push down and go fill this wick. And then continue filling in that gap potentially. Because price can just push right up because we are bullish overall. And that's just a trend. So you see how we have the CB that's inverted, and then price can potentially come back down to what? Right here. And what price is that? 488.50. We could potentially get a pushback up, but that's 23 points for 35. So price can still target that low. Let's see. 640. Yeah. Let's see. See how it treats this high. So you already took our Asian range high and low. So if this candle closes like this in 6 minutes, that next 15-minute candle doesn't break that high, then we have our range. On the 15-minute. Because look at the 3-minute. A lot of wicks is real wicky. So you don't have anything given a clear path. That's what you want. You want from the 15 down to the 5, down to the 3, you want it to be clear. Crystal clear. And a lot of this is just back and forth wicks. Nothing is left for imbalance. They drop back down. We can mark up this if we want. This has a reference point for a 15-minute. Because we already know that inversion is there, so I don't need to mark it up. I'll just mark up the confirmation. I'll probably even do it like this instead. It's the box. Red box. Gotta go check on gold real fast. Yes, sir. Yeah, gold is in 4 hour. I think it's bigger than 4 hours. It's a daily. Which one was it? Which one is that? That gold push up. We gonna push down on 30. Not 30, but ENQ. Okay, yeah. I'll wait for that. Price. That's just me setting the alarm for the candle close above. So whatever it closes above, it let me know. Now I'll go look at that. Has that one thing to come down to. Should we could come down to this consolidation right here? This is 1 minute though, so there. And why did I pick that consolidation here? Because we had this expansion down, this push up, and this is the first sign of consolidation after this push. And then that's where we broke up below it, came back up into it, just confirmed it right here, and then we pushed right off of it. We broke back above it, broke back below it, came back above it, bounced off of it, and then continued up. So if price came down, it could probably take off this low, leave this one intact, and then pushed it upside. So in this case, if I want to focus on that, then I can look at the midpoint. Actually, this click right here. But we'll see. So keep that in mind if it comes back down. So now we got that next 15-minute candle. So let's see how this candle plays out. And you see the bodies of the candle at that high. We just swept it in. But we still got this candle right here. And then we see we have 15-minute consolidation here. I don't want to have too many things on my chart when it comes to consolidation because you don't want to mess with what you're seeing. That's why I like when I put stuff on the chart, I try to minimize it as best as I can. That's why it's good to use alarms, just to have index cards where you can write down things or jot down things, price levels and such. So in this case, you see how you had this consolidation right here. You also want to see where this came from. And then if you look to the left, you see we had consolidation right here. And this, all this did was come back into this. So from here, instead of me using this as consolidation, I'll use the original consolidation, which would be this pretty much. You can say this right here, pretty much. The reason why I didn't use, you can use this basically this here to here. The reason why I use this small area instead is because I like to be precise with a lot of things, even if it's too precise, because I want to be pinpoint certain key things in price action that I see play out. Like even like this. So let's say you had this whole range here, right? Like this, and you drag this over, and then boom, you see price went into it, and then we dropped off of it. But when you look at it from this perspective, look how the bodies are stayed inside of here, and then they dropped off. So that's more of precise price action, more than just a range. It's just like very precise because I'm seeing this back and forth here. Well, this is a whole hour of back and forth. So that's why it's important to use higher time frame, because that'll get you in sync with what you're looking at or what you're looking for. So you see price came from here. Let's go ahead and label that up, 15 minute. Okay, there. So let's say a price did give opportunity up, then it can be somewhere up in here. And you can aim for that based off your risk, but you have to be knowing that we are at all-time highs, even though we're bullish. So price action right now can be a toss-up because we're at all-time highs. Price can drop down from here because it needs to go retrace at some point. We don't know when, but at some point it will, and it's going to do aggressive. Hopefully we're able to catch it. If not, oh well. And but until then, price is still bullish. So if it's giving you bullish opportunities, then that's what you wait for. If you want to follow trend, you can be a counter trend trader too, but you have to be okay with the risk. And that's why the risk is so important. Because you can't control your take profit. Sometimes you're gonna cut it early. Sometimes you're gonna hold it a little bit longer. Sometimes you're gonna come out to break even. You're gonna close out. So you don't like how it's flowing. But you can't control the take profit, but you can control your risk. You can control how much you're putting into the market, how much you're letting the market, or what you're giving a chance for the market to play out for. So okay, I'm okay with risking this to see how this is going to potentially play out. Just need that candle to stay like that, not size wise, but just stay like how it's doing now. And that'll be cool. The thing is too, like I said, we just swept this high, and it can come down to this 15 minute, and then it can push up because using it as confirmation. But remember that we just swept this high, so price can go for this low, but it can go for that low, create a new range, and then go to the upside because it still wants to fill in this. We still got this left. Still got all that left. So let's say somebody you wanted to catch something to the downside, then your best bet to catch it from the downside will be inside of this, if presented. So let's see. You follow price action here. You had this high right here, swept. Once that high swept, price pushed down, took out this low. Then it failed to go for this high. Remember, I was just telling you about the liquidity. So you got this push down here, this low, and then that low would have been there. So it would have been here to there. To there. Like that. See, I went from a premium here, and then price pushed to the downside. None of this is amusing me. But there's that push down. Well, let's see. Crazy with. I don't want you guys to be scared of the 1 minute, but I also want you guys to respect it. Um, that plays a big part. You gotta know what you're looking for. The only way you can navigate this and make it seem as if it's like a 3 minute or a 5 minute is if you know what to wait for or how to avoid the BS. This is avoiding the BS. Knowing where the liquidity is and what imbalances to focus on. But that all comes from a dealing range or having the proper dealing range. So now if price is doing this, let's say this candle closes in the last 6 minutes and stays like that, then you now have this range. Right? So if you're looking for a buying opportunity, then you want to see something like this down here. And you do have this inversion right here on the 1 minute. Just don't have any confirmation yet. That's inside of discount. So price will have to push down, probably come somewhere back up in here, and then push up, make a bullish imbalance, and then continue back up to go for this high, and then potentially that high, and then potentially that consolidation. A lot of times too with my charts, I take stuff off. So if you're following along and you'll mark it up, you want to keep it on there. But a lot of times you'll see mark something up and take it off. Like I said, I don't like having too much stuff on my chart, and it gets too noisy for me. Like you want to get to the point where you can read price action or just looking at it. Nothing on the chart, nothing distracting you. Because like if I'm not teaching, I wouldn't have none of this because I'll already see it. And what I mean by none of it, that doesn't mean that I wouldn't mark it up and put it on there at all. I would just put it in a folder, hide it, and then set alarms to let me know if it gets a certain level. Because I want to focus on what's happening right now or what's transpiring right now, and it doesn't past things or things that I see doesn't affect every decision that I make. I want to be able to flow with the market, and you have that skill set. Every one of you guys do. That gold. Okay. Gold is pushing up. Yeah, I'm on daddy duty, so I gotta get up real fast just because of her. See how it comes down. It may come take out this low and go right back up. So from here, see if it does that after this low here. Let's see. this low, so we can go for this high. See how that plays out. Look for that low. Just wait to see how it plays out, but and we seen it come right down to that midpoint. How we called that was over here somewhere. Came right down to it, whipped it, pushed right back up. Now let's see how it takes out this low. We want it to be aggressive. It could punch through it and then ride right back up. Or it punch through it and it consolidates. I don't want to see it consolidate. Because if it consolidates, we're probably going to keep going to the downside. $23,494.25. That is a 15-second confirmation. Let it go really fast. Yep, to that high. So it didn't invert it yet though. Okay, it inverted. So that could be a push to the downside. Should I wait for that to play out though? Shoo. Boy, it's a day. Yeah, it's daily. The waiting game for sure. Let's see. But the patience part plays in, fellas. Trust me, I can't stand it either, but it's part of it. See, 3 minute city break, 3 minute. Oh, yeah, there, yeah, for sure. But I would love to see if it came down to here, came to that nine, that what is it, 494, broke that, and then we pushed up and broke that, and it continued up. Ooh, that'd be perfect. Like it may even go wick this high and then come back down. I just hate it went to a discount already. Mm. Literally, 2 ticks what I was looking for. 2 ticks. Do you want to see that level break with the sweep, or do you want to? So I would love to see that level break with a sweep. It could be bodies or a sweep, because technically this right here will be that swing high, and then we already broken that, so price can come down and then come sweep this low, and then come back up, sweep it high. That's what I like to see. But it's not what I like to see. It's what's going to happen. So, but that's what I'm anticipating. So since we broke this high, I want to see it run down. It's happening inside of a premium too. Like this wick would have made this, all this, or this wick, it would have made this so much smoother if it would have just stayed inside of a premium. It just wicked. I'm sorry. Stayed inside of a discount, but it wicked back inside of a premium. because we're not in a big range. Like this range is only 64 points. So price can do that, then go right back down. Like if you have a bigger range of 100 something points, 150 points, 200 points, okay, it's gonna take some time. But the size range we're in right now, that can happen. And, you've seen it minutes. Like when we call this out. So we can watch it on because we know what the 15 minutes doing already. 15 minutes is all this range. There we go. Come on down. I left you here on purpose, huh? Because these, since the bodies are not closed below them, these will be considered equal lows. But I want to see price as aggressive as it's running. I would love to see this aggression run back up. That's what you can hope for. Don't do that. Don't do that. Look at this nasty consolidation. Like I was telling you guys last week, you can trade in consolidation. Just know you're in consolidation. You're in a range, and treat that as such. Don't look for no crazy pushes. If you get a home run, cool. But if you know you're trading inside of a range, and you're just banking on like, man, they gotta play, I gotta do this, gotta do that, and you always gonna have that analysis paralysis, or you're gonna be overthinking. Like in this situation, if you were looking for sales, and this would be your sell right here. Literally, this will be your sell if you were looking for sales. I'm looking for it to come down here and bounce off of here. It can come down here and never come back up. And your sell could have played out, and my buy couldn't have. But that's the thing. You're able to see both. Like you can take this down to this consolidation here, and then, but that's only giving you just barely a 1 or 2. So you have to aim for all the way down here from somewhere to give you a nice risk to reward. So do you see the trade going down there? You possibly can. You guys are able to see both. You just have to have a narrative on what you're trying to see and wait for that narrative to play out. Oh, okay, I'm seeing sales. Okay, I need to see this, and this happen for me to look for sales. I'm looking for buys. I need to see this, and this happen for me to look for buy. The narrative, the plot, the story. What is it telling you? Because my story can be on chapter 1 and yours can be on chapter 4. But it's the same story. This is all one big price. That's how you want to look at it. Or that's how you want to attack the market each and every day. What chapter are you on? What session are you trying to trade? Like, I don't want to be in the market past lunch, not even close to lunch. Because my usual time is way before this. By this time, I'm already done. Like I told you guys, school's starting, so we'll be doing a lot earlier. Think the stream was gonna be, I want to say 6 to 8. So I'm looking at 6 to 8. Yeah. Just because school, trying to get to prepare for school and stuff like that. That'll be, what, 2 weeks? Let's see. either that sell model's gonna punch to the downside and never come back up, or it's gonna look for that buy opportunity in here. And this is on a smaller time frame. So like I said, you had this inversion here, and then you can use, you got this inversion here, and this is a 15-second trade. See how price plays on that wick. It can come fill that wick. It's at 494. Let's see if it runs it. Even a SIBI right here. Let's see if it closes it. Right at the hourly close. Say what? Okay, hold on. Okay. There's that 15-minute consolidation. Okay, I'll right back. Okay, I'm back. Okay. Price is just sitting in this area. See if we get a decent push off of here. I gotta leave too. Mom is sick. It's always something. Check on your loved ones, man. Hopefully she'll be straight. You can't hear me? Oh, okay. Yeah. What time we got? We got 8 minutes left till the stream is over. So we're finally getting that push off that 15-minute. Had to sit around, like I said, at 494 level was right here. And we still are not away from it yet. Let's see how our price plays off of that. Imbalance. Remember I was saying when it came down here, I didn't want to see it consolidate. So I didn't like that. We consolidated at the 15 minute. But there's that imbalance here. So that confirmation. I wanted to see it be aggressive. It wasn't aggressive. So you go, at least take out this out here. Nothing in the way on the 15 minute. And they try to be sneaky going into premium, back into a discount. Oh yeah. Yeah, that consolidation, man. 23,487, yeah. Because it lined up with everything. It's just that consolidation at that 15 minute was disgusting. Let's see if it gives a push up. Like, I'm not trying to see it go back below 488. 23,488. If it start going back below there, and that's what that consolidation does. Whenever price is not aggressive, the consolidation, you start get price ranging, and then you got to deal with that. So whenever I'm taking a trade, I like to see price run. Whenever it's like this, back and forth, I'm like, yeah, man. Like, I don't like that. Like, it's coming down there now. 488. Yes. It's not clean. It's real choppy. Real choppy. But it can bounce off this 15-minute level and continue up, but it's not clean. That's the main thing that you're looking for, is clean price action. Now, if it can close 290 or 493, but it's not even want to go back up there yet. And especially in this market, when it's consolidating like that, I don't mind break even. Because, like, you just don't have to deal with the headache. The whole purpose of the model is to get something and take off. If it's not doing something and taking off, I don't like that. See how it's like that right there? I don't like that. But you can see that coming. you can see stuff like that coming. Like whenever you have that model and you place that model on there and you're looking for price to come down to that certain area and it gets there and it starts just doing this, you like, oh no. That's why I like market execution over limit orders, because I get to see the price and see how the price is playing out going to that area of interest. I don't know how long price is gonna play around here. It it was trying to be slick. That's all we got. As I said earlier, we got a peak up into premium, a peak up into premium here. So these two pushes up into premium, and then now equal lows there. We'll see. Let's see how 489 holds up. You welcome. You welcome. Yeah, man. Reading that price action, man. And then look. And then that can be a boom. So you got to be careful with that. Can't fall for the okie doke, man. Like if your risk is not small to where it's like, okay, I'll lose that, cool, whatever. But if it's a decent sized risk and you don't feel like comfortable with it, break that thing even. Don't even play around with it. It's not worth the headache. It really ain't. Because you're going to have much easier trades where it's just clean. That's what you want. This is... Well, it's Monday. So you expect this. This is not unexpected. That's the thing. A lot of people get this price action. They be like, man, I don't know what's wrong with the market today. Yeah, it's Monday. It just started. And then, like, if I was getting this middle of the week, I'm like, okay, what's going on? Like, you don't see me trying to go to another time frame and figure it out. Because it's Monday. It's price action, man, price action. And then look at the 3 minute. Look at all those wicks. And then you look at the 1 minute. Then you go look at the 15 minute. Like, look at the 15 minute. Just wicks. There's no clean directional bias. Like, we have a directional bias based off what we see. But just from pure market structure, looking at it from what they call it, I forgot the not framework. It's like I don't know, but basically what I'm referring to is like when the wicks are not on the bodies of the candles. You're looking at it from that standpoint, and it's not telling no story. It's telling you what it wants to do potentially, but not clean. And right then and there, I took my foot off the gas a little bit, and I tell myself like I can't be over aggressive like I want to be. Like you have to dial it back, even when you feel like you're in sync with the market. You get stuff like this, and then you're like, man, this and that, and it should have did this and it should have did that. You can say that, but at the end of the day, it's like, you want to be part of this? Nasty price action, man. Just disgusting. But we called this from the beginning. If it consolidating, we ain't dealing with it. So I wish you guys the best of luck, man, for today. Look at it how we transpired today, how we got that consolidation, and how we're able to anticipate the consolidation. And if the consolidation did happen, then how we're going to approach it. So we've seen the big drop this morning, that 15, this candle right here, how we had that push down. So that was cool. And all in all, we're able to look at price action and flow with it. So we'll go kill it tomorrow. I'll see you guys in the morning.